Nigeria's Securities and Exchange Commission Chief Lamido Yuguda today in Abuja received a delegation of the Lagos Commodities and Futures Exchange, its trading partners and other institutions. They highlighted the product offerings that are on offer at the Lagos Commodities Exchange and their relevance to the financial markets and the economy in general. Let's listen.
The forward contract is basically whatever you produce in this mill, I'm ready to buy. And instead of people going to just hand over cash to immortalize mills, the governor has decided that, look, let us put a proper private sector structure into this. If you want to buy the head rice, go to the exchange, buy it, take your delivery from the mortar. And the good thing about mortar is that the quality of the machinery is from Bohr, which is a German machine. They have activated their boiler yesterday. They have activated water yesterday. They have started parboiling in a view to producing this. Now, what are we going to do? All the people that are giving mandates to immortalize mill, that look, for any amount of rice that you produce for December, we want to buy. So effectively, immortalized mill can actually collect money directly from people for the produce that they're going to have at a later date. So instead of doing that, we are structuring what we call the forwards position. So instead of them collecting the money, the same money will be routed through the exchange, through the structure. And that money will be remitted through the settlement bank back to Immortal. And Immortal will deliver the head rice at a particular date. What that does is that it creates continuity for monies to go back into aggregation of paddy, for people to be able to sell their paddy back into the market. From the conversation that we had with them, when the head rice is produced from Immortal, it's going to come out at maybe 30 to 32,000 per bag. That's what the projected price is going to be. Now, the sale price of a bag of rice today, as of today, in the open market is doing like 42,000 now, to 45 to 48 in some cases. It means that there is a headroom for people that are going to invest in those rice forward contracts, which we're almost done with. And the other part is that based on the rules of the by SEC to us, any leases that you want to do on boarding or a commodity or any exchange, you must make sure that you make provision about 25% floats in the market for participants to take advantage of. That takes care of people that have been mentioning that one money bag or two can buy the whole forward contracts, keep it for themselves, create a secondary market.
And I think this is really a great fit by Lagos Commodity and Futures Exchange. And I really wish you all success in this market. This is a very important market, the gold market, because this is real true store of value, and not just today, yesterday, but over the centuries. It has been proven over, and over again. If you look at many things, I read a book, it's called The Golden Constant. It's really about the value of gold, how the real purchasing power of gold has not changed over the years. And it's really a good book to go and consult, and read. And I think especially today, when we have a lot of investment products, to really have gold and its associated linked investments, coming out of the Nigerian capital market, I think this is really something to celebrate. I will, urge both LCFE and the entire value chain that is presented here to always have investor protection at the core of their work, because eventually this is what will actually what will make this product to succeed, or not. Now, the gold itself has intrinsic value. So once you put out your money and buy it, you actually do have value that is incontrovertible. But where we need to be careful is the associated investment product, the derivative products, okay, the derivatives products, built around the gold itself. We must have investor protection, at heart. If it is taken out and investors have confidence that anytime I really want to sell this investment, I'm actually likely to get more than I put in. And that is the true meaning of investment. Okay, we put money, when you invest, you are postponing current consumption for future consumption. And you need to be paid some return as a price for that postponement of current consumption. So when now you sell this product in the future and you make a gain, you are actually being rewarded. But when you sell this product in the future and you make a loss, you are now making actually two losses. One, you have postponed current consumption, and two, you have not even recovered your principal in the future. And when people do that, as happened in the stock market in 2008, you find that the investor confidence wanes. So when we do things, we have investor protection and investor interest at heart, you find that you will create a product. Every time you have a compass that tells you, okay, this is the direction I'm going. So when you see that product deviating, you go back to the drawing table and say, I must make sure the investors actually make money out of this.